Hello everybody. Welcome to Metals and Momentum. Now, the Metals and Momentum whole project is all about a newsletter that is available for free on Substack. So if you haven't followed me on Substack or subscribed on Substack, I'll show you what it actually looks like right here. This is the main page on Substack. The topic that we're going to discuss in the newsletter that we're going to go over today is this one right here. It's called I Stopped Saving Money and Made More Than Ever. We'll get into it in a moment, but basically the newsletter is a bi-weekly report that gets sent out to Substack subscribers. If you want to be on the email list and receive this whole report in your email every other week, then you can go over to Substack. It's in the description down below. You'll visit Metals and Momentum on Substack and then just subscribe there. There's a free version. There's also a paid version that gets you full access to the whole report and a couple extra little goodies in there as well. Like, for example, you'll get trade notifications from me and you'll get updates throughout the week if we're entering into a trade. But one of the things that we do go over is an investment thought. This is free. There's the watch list. This is also free. This is what we're actually going to go over right now. So if you're interested in charts and like analysis, and then of course investment thoughts, we do all that for free on YouTube. But there is so much more in the newsletter, especially if you want to pay that $9 a month and go up to that paid tier on Substack. So if you're interested, consider subscribing to that paid tier. But let's go over a couple of the charts in the weekly watch list. So this is the newsletter here. And if we scroll down and you're subscribed on Substack, you've seen this in your inbox probably this morning or yesterday morning. And then you're going to go and just scroll down to the weekly watch list, and these are some of the charts that I'm actually looking into. So the first one that I want to go over here is super interesting. This is the S&P 500, and basically this S&P 500 chart has traded in this channel here since 2016. So we can see that it's just been like a steady grind upward, and then all of a sudden that COVID panic happened. We see the bottom of this channel starts to get formed here, and then we see a bunch of money printing. We actually connect to this upper end of the channel here again up in 2022. Then we see a little bit of a tumble, a little bit of sideways action. Essentially the money printing stopped going out, the checks slowly fizzled out, and the S&P 500 kind of fizzled down, touching the base of this channel multiple times throughout 2022 and 2023 up until 2024, of course. Then we see this massive run up that we've definitely watched over the last little while here. Everybody feels a little bit more rich. Then we see the pullback for this is the tariff kind of announcement. We see this pullback, and now over a very, very short period of time, we've rallied all the way up to the top of this channel. So we have multiple points where the base of this channel is seen as support, especially around this area right here. This is what's super interesting. Basically, throughout the past like 2 years there, from 2022 to 2024, we were essentially bouncing and touching this base of the channel here and then flicking up and bouncing off of that. So solid support on the base of this channel. And that's why I think the top here, since we've actually touched it 1, 2, 3, now 4 times, this is a warning signal to investors that I think we're actually a little bit due for a pullback. And that's what we're talking about in this section of the Metals and Momentum bi-weekly report here. I say the S&P 500 has hit this channel since 2016. We saw it base at the COVID panic and throughout the 2022, 2024 kind of range. I believe the S&P 500 is stretched right now, and I think we are due for a pullback. And basically, there's a large portion of this, the beginning of this newsletter that talks about one of the ways that I'm actually preparing for that pullback. So you can kind of go through and read this. If you want to pause the screen, I'll let you kind of read through there. And I was telling my subscribers, if I was advising my mother, I would call her today and be like, listen, like I would maybe consider talking to your investment advisor and maybe raising some cash levels here, because this is what I'm looking at. So that is the S&P 500 chart. One of the interesting things that I've been watching is the gold chart, where metals and momentum. Of course, we're going to watch gold, and it's one of my favorite investments right now, especially because we've seen such a massive run over the last little while, but I actually think we're topping out. So this is the gold chart that I've posted in the newsletter for subscribers here. And this is a topping tail over that we saw back in like near the end of April, right? So this is a topping tail that I've highlighted in with like a circle. And basically this topping tail needs to be respected until it breaks above there. And we tried to break above here. Now I'm actually going to go over to the actual gold chart so we can zoom in and get a little bit of a clearer view here. Look at this run that we've had in gold. So what is this? This is a 89% move from the beginning of, what is this? This is 2023 up until now. This is 578 trading days, 89% jump on physical gold there. But that is an impressive move, and I believe we might be topping out and be about ready to pull back. And I'm just going to get rid of that measurement there, and I'm going to zoom in on the chart here and talk to you guys about what I'm seeing is I believe it's called a long-legged, long-legged doji. This is what I was looking at here for subscribers. Basically, this candle right here that's highlighted in the box is essentially looks like a cross, right? And a long-legged doji is essentially like a burnout indicator. So it generally will come at the top of the range as we're about to like fizzle out and maybe take a step down and trade a little bit lower on whatever asset that we're actually looking at. And what's interesting is that this long-legged doji is essentially at the same point as the topping tail that we see over on this side here. So these two indicators paired together, I think, is something that is confirming that gold is likely going to break down. And basically, I'm going to look with subscribers and we're going to look to profit on a decline of gold. And we've actually seen a little bit of a decline happening. So we got that long-legged doji. I'll even zoom in just a little bit further and we can see here's the cross created, and it's like right in the middle. That is like what a long-legged doji is. You got this like topping, this like tail that comes up here and a tail that goes down here, and then we essentially close like zero for the day. That means whatever that asset is probably a little bit exhausted, and it generally happens at the top of this trade. Then for the next couple trading days, what has been the past couple trading days is you have 1, 2, 3, 4, 5 down days, and now we are underneath and back in this long channel that we see on gold. And this is the channel that gold has been in since the beginning of, I guess this is October. So this is like just the end of 2023 up until now. And 89% move on gold is pretty, that's an amazing move. I was lucky enough to be a part of this move, and then we moved into another asset, which I'll talk about in a second. That was NAT. That asset has essentially gone from peak to another move upward, and that has gone 23%. But I'm looking at gold right now, and I'm thinking the topping tail was interesting. And now we have another bearish indicator at the exact same level. So that makes me think gold is going to go lower. And I think we could probably get to the bottom of this range here, which is about 3,775. Depends on where it goes, right? Or how long it essentially takes to get back down there. Like, for example, you could touch the top of the range in a couple different ways, right? And the same thing goes for the S&P 500 chart that I was looking at. We could essentially trade sideways and then touch the top of the range here, or the bottom of the range here, and then start to go up. Or we could see a major pullback and touch 3,000. And this would actually correlate with my S&P 500 chart that I had and I was talking about, like there's two ways that you could essentially touch the bottom of the range here. You could essentially trade sideways for a really, really long time and then touch the bottom of the range as that bottom of that range comes higher, right? Or you could get a massive pullback like what just happened in 2025 when there was all these tariff announcements, right? You can go from the top of the range to the bottom of the range of this channel very, very quickly. So we can actually measure this out and how quickly did that actually happen. We can do that. And basically what I was telling subscribers is this is like a 21% drop. So from the top of the range to the bottom, this is a 20% decline. So essentially right here, you'd essentially be a little bit less, 19% to the bottom. Yeah, about 20% there. And if we could potentially bottom out and pull back, which I think we probably will, or we could break up. And you could see that there was like a slight fake out. So if you started to go bullish on the S&P 500 somewhere around here, you actually got faked out because on the very last trading day, which was Friday, that was August 15th, you actually traded back into this range and closed into this range. So you got to be very careful as you start to break out. You really want to give it time to just make sure that the chart is confirming the breakout. 2 days, I feel like that hasn't been working lately. That's generally my rule, is like I want to see 2-3 days of like a confirmed close above that trading range. But lately what has been happening, and I got faked out of GDXJ a little while ago, by doing this, I jumped the gun. I was 2 days in. We saw the confirmation, but then on that third day, it actually closed lower than the target. And this is exactly what's happening on the S&P 500 right now. So Friday, we get that close, and that's what's making me think that this channel is actually still intact, and that's actually a bearish signal. So I think the S&P 500 is going to take a little bit of a decline right now. And one of the things that I'm telling subscribers to actually do, and what I'm doing is moving over into SGov. So SGov is like a vehicle that is used to replicate the 0 to 3 month treasury bond. And this mimics that performance and does it in a way where you're not actually buying treasury bonds. You're buying a fund that mimics the performance of those treasury bonds. So it's a little bit easier to get in and out of. You could actually do this in a brokerage account. And we talk about how to do this in the newsletter here. And then also compare that to real estate. So if you're interested in real estate, especially Canadian real estate, then this is something to maybe take a look at. So getting back to the watch list here, another stock that I was just kind of teasing there is NAT. So NAT has had a beautiful move since the low back in April, which is when I decided actually to move my whole entire portfolio into NAT, because there was just such an amazing opportunity. One, I thought NAT was super undervalued, but then I also started to get notifications that some of the biggest buyers of the stock and the company itself was buying back shares. So this is one of those situations where I was like, oh my gosh, we're definitely going to see a bounce here. I had started nibbling back at like 245, somewhere around like here, maybe even 260. But the last and final major purchase I made was when they started to announce the share buyback program. And then that massive shareholder, one of the biggest shareholders of NAT, came in, and it was like every week he was buying like $250,000 worth of NAT shares. And I'm like, there's just no way that this is going to stay, it's going to get any lower than like, I think it was 216 that I bought at. So since then, we've seen a 30% increase in NAT. And this is one of the reasons why my portfolio has done so well this year, is because one, I was holding gold and gold stocks for most of 2023. And then near the end of 2023 and into 2024, I started to pull some of those positions off. Gold continued to run, which was unbelievable. So I was still making a little bit of money there. But then I got into NAT, moved the whole portfolio into NAT, and then we've seen a 30% increase since there. So that was an awesome move. And if you're interested in getting these trade notifications, then head over to Substack, Metals and Momentum, and hit subscribe there. The paid tier is where you get those trade notifications. So That was awesome. I pulled like $3,000 profit pretty quickly off of that one. And then we're looking to trim that as we kind of go along here. And especially if the S&P 500 starts to decline, I'm going to send out trade notifications to my subscribers and look to trade positions and get heavier into cash. But basically in the newsletter this week, I was telling subscribers that I'm moving to 30 to maybe even 40% cash or cash equivalent. So I consider SGov to be something like a cash equivalent account because it's essentially mimicking what the movements in the treasury bonds are doing. The other thing that I was looking at was uranium stocks. So if you've watched a previous episode, then you know that I was looking to jump into uranium stocks, but a lot of them just did not have the pullback that I was looking for. And they had a small pullback, but not enough to where I thought the risk to reward ratio was worth jumping in. So UEC was one that I was watching. We saw this massive breakout and I'm like, oh, okay, we should get ready for a pullback here. We only pulled back like just a small amount and then we just started to rocket up higher. Denison Mines, this one is one that I was looking at, had a little bit more of a pullback here. We started trading in this channel. I was hoping we were going to come back and actually touch maybe the 50-day moving average. Then I was ready to jump in there, but we have just not seen that happen here, and we're actually looking at a double top and topping tails forming on the top of this chart here. We've seen a decline over the last little bit here. Maybe we might bounce off of here, but I'm just not interested in buying a bunch of speculative positions when we're looking at an S&P 500 chart where we could potentially see like a 20% decline. And generally these large declines happen during the fall. So these are the things that I'm paying attention to over the last 2 weeks here. And this last uranium stock that I was also very interested in, this one actually did come back and break out and pull back to the 200-day moving average, but it only did so for like a 2-hour period, and I missed this trade. So unfortunate, but it is what it is. We'll have to move on to the next one, but that's okay because right now I'm actually looking at this is actually a head and shoulders position right here. So we have two shoulders, a head, there's the second shoulder, and generally with head and shoulder positions, those are going to decline, potentially bouncing off of here, but I'm not too sure. I'm not super comfortable in making a call on this one anymore. Right here would have been great. We could have traded that, saw the topping tail right here. But like I said, it only touched here for like 2 hours and then it was back up in the same trading day. Very unfortunate that I missed that. I stepped away from the computer to deal with something and then next thing you know, it is gone there. So that's unfortunate. So I'll leave you to the link in the description. There is a newsletter down there that you can see all the more information than what I'm talking about right here. Last thing that I'll point you towards in the newsletter is a section called the value vein. So this is essentially what I was talking about on the gold chart, where you're going to learn something about trading and investing in under like 2 minutes or something like that. And this value vein breaks down exactly what we just talked about. In the gold chart, you saw that topping tail, then the long-legged doji, and this is a bearish indicator that we could pay attention to start to notice those tops in investments and maybe consider pulling back some purchases or maybe even trimming some of the positions that we have using those indicators. So that's all available in the newsletter. There's more available for paid subscribers on Substack. So consider becoming a paid subscriber, $9 a month if you want to get the full access. And in the newsletter, there is a long-term portfolio as well. So it's not just all about short-term trading. I try and give something for everybody there. $9 a month. That's it for me. My name's Anthony. Thanks so much for listening to the Metals and Momentum bi-weekly update. We'll see you in the next one.